Hi friends, welcome back to the channel. This is your daily news. We go over some headlines. I share my thoughts, get yours as well. And also want to give a shout out to Roger and Nikki and David for pizza support. So I really do appreciate that, guys. This channel runs on pizza, and also too, this channel wouldn't exist without the community like you. So I do appreciate everyone coming back for more. So anyway, let's just jump in and we'll chat what's going on in the headlines these days. So first is this was yesterday. Meta shares surge as digital ad rebound fuels AI investments. And it's actually really interesting because essentially over at Meta/Facebook, they're trying to convince you now that, they're going to put all their money in AI and they're going to jump on the bandwagon and they're going to be awesome. Before, they literally changed their name to Meta and they were all in on Meta. So I don't know if they have to change their name to AI Facebook or AI Social. Actually, you know what? AI Social. You heard it here first. That's probably what they should go with, or AI advertising, whatever. But they're going to try to make the case that AI can be used for, your Instagram, Facebook, WhatsApp, and all of their applications going forward. When you read other headlines, and just sharing with you guys here, Zuckerberg says, Zuckerberg gushes over Meta's AI ambitions as Metaverse loses $4 billion. So that was essentially a money losing venture, that whole Meta stuff. Whether AI will actually pay off, who knows? Right now, it's just, probably frank, it's hype for a lot of companies at the moment. Because essentially you're investing into the future. I personally think, though, that yes, AI will be part of our business going forward. But when will that actually produce profits? Now, in the case of Meta, which I think is interesting, you could make the case that, hey, if you give us money for ad dollars, we're going to be able to target way better than ever before using AI. But that's kind of the same as what they do now. I think the AI is more of a buzzword, and to make it even sound like even more cool than what they're able to do, which may be the case, right? So technology will get better, but will it be like completely game changing over at Facebook? Who knows? Because here, just want to remind you that they didn't do so great on their early investments in the metaverse, but this is years down the line that they were trying to go with, and so that's essentially when the stock took a hit because people were like, oh my god, you're spending all this money to try to make money in the future. We want profits now. They evidently did convince everyone that they're still alive and kicking. And if you did get into Meta back in November, December, that's essentially, honestly, been the best trade all year. So it's been fantastic. You guys can see it there. So I'd be curious if anyone was doing that. We were talking about November, December as being, if you were to take a bet, it's not a crazy bet to make and ended up being pretty good for a lot of people. But to be fair, if you're just holding this thing for the last 5 years, you're not really like super happy because you're only up 35%, which, isn't that great compared to a lot of other big tech things. So this one has been extremely volatile. We will see if it holds or falls back down, because some of the things that are odd about it, and I'm looking into numbers with you guys, I want to share it, just makes it feel kind of like a short squeeze kind of situation. So essentially, look at this. Meta shares up 170% in 5 months, right? That's fantastic. It's absolutely fantastic performance, right? But then you read more, virtually no revenue growth. And then you also put that together with their spending money on AI, right? It just seems like more of a squeeze situation. Their earnings report came out. I'm just showing you guys here. So revenue up 3%, which isn't that much, right? You can see for yourself, but it wasn't declining. That's sort of where people were excited. Their costs and expenses went up by 10%, right? So the revenue went up 3, but then their cost and expenses went up 10. However, these earnings reports are a little bit tricky. I had to dig through it, and it turns out, so with the cost expenses, they had like a one-time expense. It was like $1 billion. I think they called it restructuring. I'm looking for it here. Yeah, it was called restructuring, and they were trying to make the case that it was like a one-time thing. Where is it? Yeah, right here. Related to restructuring efforts, $1.14 billion, and they were saying that was the first quarter of 2023. So that may be done for them in terms of having to pay that kind of one-time expenses, but it did cause their cost expenses to go up. So then their income from operations was down 15%, right? Income from operations down. Net income down 24%, and diluted earnings per share down 19%. So when I first looked at the numbers, I was like, okay, so why are we cheering? Like, all your numbers are down, your revenue's not really up that much. Because remember, guys, your revenue can grow, but if your expenses exceed your revenue, not so great. But again, they're making the case that was kind of a one-time thing, and that AI is the future, yet they're spending money on. So the whole thing was a bit funky to me, to be really honest. I'm also looking at other tech earnings as well. This was Microsoft. So they're increasing their revenue, they're increasing their operating income, net income, diluted earnings. I mean, they're growing. So are they growing crazy amounts? Not necessarily. You're looking at around the 9 to 10% growth. We've talked about this before on the channel. The last I checked on these kind of things is something like a Microsoft, is they have a ton of B2B kind of things. So assuming that, not everyone cancels Microsoft Teams, that kind of thing, right? I think they're going to be, essentially have a steady base of revenue stream coming in, which may be different than Facebook, who's really dependent on ads. So people can cut ads at any moment, but it's harder to cut your Microsoft services. The other thing too, which is going on, which is the whole Bing situation we talked about before, is Bing has more search market share to gain, whereas say something like a Google has more to lose, right? Because I think Bing's like 1% of total search or something like that, so they have a lot more to go up. So they have more upside, I would say, than something like a Google, in my opinion. However, the downsides for Microsoft, the Activision deal got canceled. Their sort of consumer slash Xbox kind of stuff is starting to slow. So you're starting to see a divergence there. And we're going to get more into that as we go through some more of the numbers. So this was the Amazon thing. So they're doing great on cloud. They're doing great on advertising. However, right, it's funny because we think of Amazon as being like a delivery company, but that's not necessarily where they make their money, which is really interesting. So because they're such a, they're a large company to have multiple ventures, it sort of balances each other out. So their sales are up, what was it, 9%? And then you have to really dig through the numbers of this stuff. And I have it right here. And Amazon one, to be really frank, was way more trickier to read than other ones because they're such a big business. I'm just being honest with you guys. So there's a couple things that stood out to me. So one is right here. I keep seeing this year-over-year change that their free cash flow was down. I could see these numbers here. But the one that everyone was gushing over, right, it was operating cash flow was up 38%, yet their free cash flows were down. I could see it here, like say 66, 82, right? So that was kind of funky. The other two, what I thought was interesting here was their margins are really thin. It was the operating income, and then your operating margin percentage, it was like 2.53, 2.7. So it's like less than 5%. And it was interesting because, it was all over here. The margins are like really, really thin. And it was interesting because I was thinking about a company like an Amazon, is that they're really, really dependent on volume and cash flow. So that's sort of why everyone's excited that you got more money coming in and cycling through the system, because they're really dependent on margins. Now, the thing with Amazon, which I thought was interesting as well, is I keep hearing about various either union driving on either the drivers or the warehouses unionizing. And then there was a report yesterday that they were like cutting a bunch of people from Amazon studios. So I'm just being honest with you guys. Amazon was really, really tricky to read through because it's such a big business. And so they have all these different, streams. So at the moment, it seems that they're trying to make the pitch that, their alternative things, like say their cloud and your advertisers is doing really well. The cloud stuff, the AWS, is interesting because I know a lot of companies depend on them. I think there's going to be, so like web hosting and server hosting, these kind of things. And for those of you in computers, I'd love to hear your thoughts. If you're like a business, are you more apt to host on Amazon? Is their tech just much better than, say, hosting with like a Google or Microsoft, et cetera? I'd be curious people's thoughts on it. I don't, I'm not a business to where I have to choose, which server to use, so I don't work with that kind of stuff. But I'd be curious if people think if that is something that's just going to be around because they are so good. I just know a lot of people use AWS is my understanding of that. The other thing that's been going on as well is it seems like a lot of money is moving into the big tech, because like when you look at something like a Snapchat, I think their stock was down like 20% today or something crazy. Basically, they're just saying we're not making money. That's basically the gist of it. And then the other one that was interesting as well is if you, and this is sort of why I like to do the news with you guys, because if you just look at numbers and you flip around YouTube, they'll just say, Intel's a great value stock and this kind of stuff like that. I'm just saying, just looking at numbers, and then, they just always get bad news. Like you can read this. Intel predicts bigger loss than expected as comeback slide. Bigger loss than expected, not so great. And then they're saying, disappointing margins. This was sort of their charts. It's just that their sales keep going down. And, one of the things that I'm just talking about, like I'm an Apple person, and, Apple now makes their own chips, and I think that hurts companies like Intel. And I know Apple is a very small percentage of, say, all of their sales, but I also know too that PC sales and these kind of things are down because people bought them a couple of years ago during the pandemic, and you don't need to upgrade like every year. It's just not something that's happening. And this is something that coincides with that, where over at Samsung, where I'm in Korea, you guys know this, but profits plunged 95%. right? Lowest since 2009. So it's interesting. We're getting these sort of mixed messages from different tech companies in the industry, or for example, we talked about, say, Snap, which is really failing, and yet Facebook is soaring. Yet their revenue is not really growing great. And also they're saying they're going to spend a bunch of money in AI. And so this is where I feel like sometimes the stock is sort of say disconnected from what the company is saying. And then that leaves me more of like squeezy kind of stuff. And you understand what that means. The basic gist of it is that if people are betting against the stock, right, you're short a stock, you essentially bet against it, and then you try to basically cover your bet / profit from it. And that stock causes the stock to rise temporarily, and then ultimately will come back down again. Now, what's it going to do in the next month? Who knows? We usually have this phrase, sell in May and go away, right? Where when all the fund managers take vacation and just forget about it. And also, too, most likely the Fed will raise interest rates come May. So we'll see how next month will be. Because when I because I read the news with you guys all the time, when I see this stuff like here's another headline. Americans are saving far less than normal in 2023. And I actually pulled up the data that you can see right here. This is over at, the Fed keeps data on this stuff. So this is basically our savings rate. It peaked in 2020, mostly because they're giving people stimulus check money, and they were unable to go to Disneyland and spend it, essentially is what it was. And you couldn't even order cars if you wanted to, you just couldn't spend your money that well. And then as costs soared, and people lose their job, they started spending, the savings rate has definitely gone down. So it's at like 4.6% or something like that. I think the average savings rate is in the 8% range. I mean, you can see it right here, right? It depends what year you like. So like, for example, in 75, people savings rate was like 15%, right? But it depends who you ask. It's yes, some people are saving, but if you lose your job and you're hurting, right, you're obviously in a world of hurt. And then our savings rates have been going down. And then started to increase in 08, 09, right? You guys can see right there. It's really quite interesting to look at this. So it's a combination of, are you encouraged to save or not, depending on, what interest rates are in bank accounts, and then how's the market's doing. And then again, like, do you have a job or not, and this sort of stuff. And it's not everyone. It depends on how your particular circumstances are. The GDP report came out and it said that growth is slowing. I think GDP was at 1.1. And the key is for this kind of stuff is sort of where are we going? So this is according to the Wall Street Journal. You guys can just see the chart for yourself. So their projections are, so at one point here is very flat the next couple of quarters, and then maybe a dip, maybe quarter, that should be quarter 3. I think that's what it's going to probably imply. And then maybe an uptick in 2024. It's interesting because the markets are still betting on rate cuts this year, which I think is really strange, to be really frank, because the Fed hasn't said that at all. Just if you ask me, say, hey, Chris, what do you think? I mean, my personal opinion is let's go with what the Fed says. They say, hey, we're not cutting rates. We're going to keep it elevated for quite some time until we beat inflation. So this is where I think the markets be crazy, but we'll see. Markets are essentially calling that the Fed is a bunch of liars, and we'll see if that is indeed the case. So, but again, this is the forecast from the Wall Street Journal. You guys can take a look at that for yourself and pause it. The big one, though, which I think is probably, well, there's 2 big ones, and I think are the concerns, or 3 really, if you want to include the war in Ukraine, but is, what's called commercial real estate in our banking system. So First Republic, I'm not showing the chart here, but I did look at it. It went up today. I think it was up like 12%, but it was like a couple days ago, it was down 50%, and then it went down 30%, and now up 12%. So, I mean, you're recovering some, but there's a bit a worry over there, because the government's like not going to, at least they've said so far, not going to bail out First Republic, and they can't find a private buyer. There's going to be a buyer eventually for those kind of things, but because that if you are going to buy like a failing bank, you have time, because they're desperate. They need a buyer, and they're just waiting for fire sale. So, we'll see what happens on that. And then on top of that, you have something like this headline where it says, fire sale, $300 million, San Francisco office tower, mostly empty, open to offer. So, there's a lot of these commercial buildings that they just, they're vacant, and the people who invest in these things are underwater because they don't have tenants, essentially. And it's tough to find people to fill these things because, the startup money is gone, the tech money is gone. And even if the money is there, say, for example, like a Twitter, they're not paying their rent. So this could cause a cascade. And then we have the regional banks are overexposed to commercial. So these kind of things. And then it's interesting that you guys know that Tucker Carlson and Don Lemon got fired. So Tucker actually made a Twitter video. I'm not going to play it for you. I watched it. And if you really want to watch it, you can. But, I'll just read the headline and just share a couple thoughts on this. So Tucker Carlson speaks out on Twitter video 2 days after his ouster from Fox News. I saw it on Twitter, and if you've ever seen Tucker, it's exactly what you'd expect it to be. And I would just want to address this because I think one of the things that bothers me about someone like a Tucker is to his audience, and maybe people really respond to the kind of messaging that he says, but it's like he's basically saying, hey, it's a uniparty, parties are the same, they're out to get you, they don't care about you, and then the world is falling, and I'm here to tell you the truth, and no one tells you the truth and stuff like that. And it was really ironic, is the right word, because basically one of the reasons why he's being outed, I guess in his office, as this reports are coming out, it says he had a sexist culture in the office, and this is, I guess, someone was saying that they put a bunch of this is what someone said. I don't work there, but I'm just telling you, it sounds weird, but I guess they put a whole bunch of pictures of Nancy Pelosi in bikinis everywhere, and I know it sounds weird, right? It's like, why? And then I guess he would run around the office and really, really want evidence that Dominion was cheating people or whatever, and then as it came out later in text and stuff like that, is if it wasn't the case that they bring people on on their show that maybe aren't necessarily saying the truthful stuff, he started to feel more uncomfortable with these things, but yet still push the lies. It's a complicated thing, to be perfectly frank, this whole Tucker stuff, because I feel like these people really want to say a certain kind of thing, and then they really want to find said evidence for said thing. And then they're kind of in this weird dilemma of like, okay, do we push lies or not? And then you have on top of having basically just an unhealthy work culture. We've heard this before on other people over at Fox. And also to be fair, this isn't Fox alone. Evidently CNN was having problems with Don Lemon and these kind of things. And, we know, say, like, for example, like a Matt Lauer, it was like NBC or stuff like that. And, this reminds me of why I don't like to work in these type of environments. And I always find it strange for people who want to support anyone who behaves in these ways. I just think it's awful. Be it your wife works with this, has to work with these kind of culture and people, or your daughter or your aunt, right? These kind of things, or your mom even. And so it doesn't shock me that someone like Tucker is that kind of person. And then you put that on top of that's one thing, right? The whole just his demeanor at work, and then you put that on top of pushing lies and these kind of things. So, but I guess that kind of stuff and these kind of culture and those kind of people appeal to a certain part of the population. I try not to be that way, and if you guys have been following the channel, you'll know I was a professor for about 10 years, and this was part of my job. I deal with young people all the time. I'll be writing about in the book, but it's something that you how can I say, are very aware of and very sensitive of how you are in a position of power, and you have to decide ultimately how you treat people. And hopefully cultures will change as we go to say work from home. And I think for a lot of workers out there, those what, I don't want to go in the office and deal with my crazy boss. I'd rather just stay at home and just do my work and not have to deal with that sort of political or harassment kind of things. I think that's a lot of people why they would prefer to stay at home, myself included. I don't want to go to work with people I don't like or treat me poorly. I'm sure you guys know what I'm saying. So, so that's why, I just think if you really want to watch the Tucker stuff, it's just, he appeals to a certain kind of audience. And I would say, take anything that he says with a grain of salt, because when reports come out and, you have legal documents and also evidence of texts and phone messages and these kind of things, I think that says more about a person than necessarily someone like what he says in public. You guys understand what I'm saying here. So anyway, do appreciate everyone's time. I'd love to hear your thoughts on any of these headlines that we talked about today. And again, like I said, you got to really dig through some of this stuff, because it can get really, really tricky, because you'll see the performance of a stock, and you'll read, what headlines are, and then you'll have to read in what the, financial statements are. And sometimes they don't necessarily all jive together, and you're like, what? And so that's why I try to tell you the truth. It's like, I literally show you, and I'm just like, I don't know what's going on. It's kind of funky. But that's when I always say, sometimes the stock market be crazy. So thanks again for watching, everyone, and I'll catch you in the next video.